Warren Buffett is sitting on buttloads of cash because he knows that there is some major trouble going on in the economy right now. All right, first story of the day. Warren Buffett sits tight on cash as Berkshire investments take a hit. Now, to me, what this reads is Warren Buffett is sitting on buttloads of cash because he knows that there is some major trouble going on in the economy right now. And just think about it, right? He's attributed as the greatest investor of all time. But if he's the greatest investor of all time, why is he sitting on $150 billion in cash? Wouldn't he be putting that to work if he thought that he was going to be making a bigger return than just cash? Right? Think of it logically, right? If Warren Buffett really thought that the economy was great, if Warren Buffett really thought everything was awesome, the economy's growing, the job numbers are fantastic, credit card debt is at all-time highs because people are so excited to go spend money, let's think about that. Do you really think that he would be sitting on $157 billion in cash? Ain't no way. Hey, thanks for tuning in live this morning. I appreciate it. So let's take a look at this story and let's see what it says, right? Warren Buffett's Berkshire Hathaway posted a $12.8 billion loss as the company's portfolio underperformed. And that underscored by the billionaire's unwillingness to spend on new investments while he's sitting on $157 billion in cash. This is exactly what I'm saying here. His investments are tanking, right? And he's saying, I'm not buying anything right now. In fact, the article goes on to say that he has sold more stock than he's bought. Dude sees the writing on the wall. And people want to attribute Warren Buffett as being the greatest investor of all time. And when he makes moves like this, it becomes headline news. And it should be to you. You should understand that if Warren Buffett is going to cash, if the longest term investor, where he's basically got the mindset of, I'm going to hold this for 50 years and I'm going to make money. If that kind of investor is going to cash right now, why in the world are you thinking things are better out there? It just makes common sense to me, right? The company's third quarter loss dwarfs the one reported the same time last year where he lost $2.8 billion. So last year he lost $2.8 billion. This year he lost $12 billion. Dude is not looking so hot right now. And Apple, it's one of the most significant holdings, accounting for nearly half of Berkshire's value, dropped by $25 a share, and after it peaked at $196 in July. Everything is not looking hunky-dory, right? The company's core operations draw from insurance companies and other properties acquired over the year, like Geico, and it's rebounded, reporting losses in the last 6 straight quarters before 2023. And this year, the insurance company achieved a $700 million underwriting profit. Now, real quick, my name is Christopher Yule, and if you're just tuning in, we cover the biggest headlines of the day and what the AI trading data says about it too. And if you're interested in that, be sure to definitely hit the subscribe button down below. And start trading with AI today. Head to ovtlyr.com to see why outliers win. Now, I don't know about you, but insurance is one of those sticking points to me. So I've actually worked at 2 insurance companies in the past, State Farm and Union Standard Insurance Company. That's a commercial insurance company in Dallas. And working at State Farm, I was working in an agent's office while I was going to grad school. You know, it was a sales job. It wasn't what I wanted to do with my life. But it gave me an opportunity to learn about the insurance industry. I don't know about you, but every time I've looked at insurance over the last year or so, it's been going up and up and up. And let me tell you an ugly story that I had to deal with. Thankfully, no claims. But in April, my house was due to renew. And of course, I got the renewal and it went up like 30% or so. So I call up the agent and she's like, yeah, that's the best we got right now. You're just going to have to take it. And I'm like, I don't know about that. So I'm shopping around. And over the course of shopping around, I find out that Costco actually has an insurance arm inside of their business. And I had no idea of this. So I was really excited about it. And I got online and filled out all the information. And then Costco comes back and they're like, okay, we're going to get you auto, home, and umbrella, all good to go. It was saving a little bit of money, not all that much overall, but I was like, okay, I'll just go with that. And then they send out one of their representatives to come inspect my home. Now, I've never had my home inspected. Usually, every insurance I've ever had in the past, they're just like, here's your policy. Here, give us a premium, right? So they come out and inspect my home, and a couple weeks later, I get a notice in the mail. It says your premium has doubled, and I'm like, why did my premium double? So I call them up, and I'm like, so the home value that you're insuring didn't double, the policy hasn't doubled, but the premium has doubled? And they're like, yeah. When we came out and we saw at your house, we assigned it as a high value home. So the premiums double when you have high value homes. And I'm like, wait. This doesn't add up here, right? This doesn't add up. Are you telling me that my house that you're insuring, the value of the house has not changed? The value of the dwelling on the policy has not changed. But my premium has changed because you came out and judged me and said, dude must have a lot of money. We're gonna double his premium because clearly dude can afford it if he lives in a nice house this nice. So whatever you do not buy do not buy Costco insurance. Sorry, Costco. Not only did you lose a customer, you're gonna lose every single person that hears this video. But listen, that's the game they're playing right now. They're jacking up prices everywhere. Oh, and when I went back to the agent, of course, it cost more. Instead of the 30% from the year prior, it was an additional 10% on top of that. And I'm like, son of a bee. That's what I get, right? That's what I get. So yeah, companies like Geico are raking it in because all they got to do is push a couple buttons. They make more money. Easy as that. So I'm not a huge, while I have worked at insurance companies, I don't love what they do. Not at all. I love it when they pay for your claim, but I don't love how they can jack up prices like that. Geico cited higher premiums as a result of increased car prices. Well, I understand that because that's just a fact. And a decrease in collision claims. So people are driving less because a lot of people are working from home. So that makes sense too, right? But what they're saying is we're going to jack up the price on the premiums, but we also know people are driving less, so we get to keep even more. And its advertising budget was a factor in driving its fortunes, and that's helped boost Berkshire Hathaway. Berkshire sold $5.3 billion more in stocks than it bought. So that's also helping boost their cash stockpile. Increase your deductible and it will lower your premium. Yeah, listen, I've had $500 deductibles forever. And I was like, if I'm even going to come close to what my premium was, I got to bump it up to $1,000. I mean, I got it, so I'm not worried about it. It's just the fact that it's like, what a pain in the backside, right? What a pain in the backside out there. So let's go see what the AI trading data actually says about Warren Buffett's company, Berkshire Hathaway. So we're looking at Berkshire B. This is the one that's relatively affordable. It's about $350 a share right now instead of Berkshire A, which is like $500,000 a share. So looking at Berkshire B, we actually got a sell signal today. As I'm recording this right now, there is a buy signal today for Berkshire Hathaway. And in fact, if you follow these signal returns, it would have generated an 81.75% return historically. So if you're interested in getting your hands on these returns and being one of the first people to know when these trading signals come through, head to ovtlyr.com to see why outliers win. Now let's go see what the internet is saying about this, right? Berkshire Hathaway reported a $13 billion loss as the value of their investments fell. Dude's got $157 billion on hand. He'll be okay. I agree with that. But keep that in mind, right? $157 billion on hand, and he lost $13 billion. That's nearly 10%. So he had a 10% loss in the quarter. Not over the year. In the one quarter. That's not so great, right? Let's see what else it says out here. Not surprising here. I mean, what was trending in the 50s isn't really what's trending these days. All right, we talked about that earlier. Warren Buffett's the kind of guy that's like, I'm going to buy something, hold it for 50 years. This person says here, that may not be the best investment strategy going forward these days. So let us know what you think down below. Hit the like button to share this with more people. And let us know, what do you think? Do you think Warren Buffett is on the right track? Or is he way off course with what's going on out in the marketplace? You know what else is no good? The fact that I just still have not understood how the YouTube algorithm works. It keeps telling me that you're going to love one of these two videos. So click one of these to watch more. And thank you for tuning in today's Outlier Live. We'll see you on the next episode.